All right, welcome back. Today we are going to be getting into FIDUS, ticker symbol FDUS. And before we get there, I want to preface this by saying that I think BDCs are sort of given a bad rap, but I do want to give you all a sort of list to go off of and more information so that you know going into it what exactly it is that you're investing into. Because when people tell you to go and invest in companies like Main Street Capital or FIDUS, the one we're going to talk about today, oftentimes these channels don't talk about the drawbacks of investing in such a type of business, right? As a BDC. They just give you the stats. They run off. They read off of a sheet or whatever. They tell you what this stock is doing and what this fund did over the past couple years, when it was created, etc. Right? Which is all stuff that we can read for ourselves, honestly. But what they don't really go into detail about are some of the drawbacks and some of the reasons you might not want to invest in a BDC, or you might, at the very least, be cautious of investing in a BDC. And so today I want to go over that. Try not to make this too boring. Hopefully you all are with me. Before we get into it, let's go over it. Let's go over this. So I got it pulled up right here. I just typed into Google. Really simple. Listen, investing can be really, really simple, y'all. It doesn't have to be, everybody thinks that you have to take these courses. Oh, you got to take a master course to learn how to invest in the stock market. Oh, you got to buy my course, bro. Oh, you got to do it. No. A lot of this is simple Google research, y'all. It's simple Google research. That's what they don't want to tell you. They don't want to tell you that you ain't got to pay for all these courses and all this stuff that y'all, all these fees that y'all paying these people on YouTube. They don't want to tell you that you can go get this same basic information off Google. All you got to do is not be lazy and type it into your little cell phone, right? So I pulled up a list of drawbacks or reasons that you may want to be cautious of investing in a BDC. Before we get into it, let's read it. So, high management fees was number one, top of the list. BDCs may charge management fees, incentive fees, and other fees that may not be clearly disclosed. These fees can reduce the total return on investment. I think that's very important, right? Because a lot of times we look at the management fees as like, we look at it at a percent basis and say, oh, it's only 0.0 whatever percent that we have to pay, right, in management fees. But here's where it becomes tricky, because if you factor that in over the course of the lifetime of your investment, things can get very, very tricky. Those numbers start to look a little or a lot differently over the course of, let's say you invested into a fund for 30 or 40 years and your management fee was 0.06%. Over the course of 40 years, you've been paying somebody 0.06% on your investment. All of a sudden, those dividends, whatever it was that you thought you were getting paid every single year, you got to take something off of that, right? Because you had to pay that management fee. Yes, the management fee gets taken out and upon your investment. Yes, it's not like they send you an invoice for it, but that's part of the game, right? They don't send you invoices for management fees. Why? Because they don't want you to see that. They don't want you to see it up close. They want you they want this process to be as streamlined as possible. And they want it to deliver that fee to you in a way to where your senses don't perk up, to where you're not really concerned about it. Because a lot of times when we invest and when we say, just like your 401k, for those of us and for those of you that are investing in your 401k at work, it works the same way. It's the same idea. A lot of this is psychology, but it's the same psychology with this. When you invest into your 401k, you don't even think about what money got taken out. You deal with whatever is left after the fact, right? Exactly. BDCs, when you're working with management fees, works the same exact way. It's all psychology based. They don't want you to see up close. That's why they don't send you an invoice for it. They just take it out of your payment, out of whatever you pay for the stock. That's it. Right? So, high management fees is number one. Debt exposure is number two. BDCs have high debt loads and low liquidity, which can make them more likely to default on loans or shut down during an economic crisis, which is exactly what we're experiencing right now. Just take a look at all the businesses that are closing. There's a reason that I post about businesses closing on this channel. All right. It's not just to add more content or not just for subtext. No, it's to give you all a full scope of everything that's happening around you so that you can make informed decisions about your investments as we go forward on this journey. It's important to know who's defaulting on their loans. It's important to know what businesses are going under because they can't afford to pay those bills, right? It's important to know who needs to be saved and who has to come to the rescue of this business because they can't afford to run their business successfully and profitably over the course of the next 10 to 20 years. It's important to know all these things. This is why your debt exposure, depending on how much debt you have, can greatly impact that stock price and what your gains and returns are over the course of the next decade or 5, right? So that's number 2. Interest rate sensitivity is number 3. BDCs are sensitive to interest rate spikes, which can make it more expensive for them to borrow money and reduce their profit margins. Interest rate sensitivity. You've probably never heard of that before. You've probably never heard of interest rate sensitivity in this manner, I should say. But BDCs are sensitive to interest rate spikes, which is what we've been experiencing in the American economy for the past 3 to 4 years. Ever since the pandemic, the stock market has been wildly unpredictable for the past 4 years. And in an unpredictable market, guess what businesses do? They take greater precautions, right? They take less risks, right? Number 5, tax rates. BDC dividends are taxed at ordinary income rates, which are higher than the capital gains rate for other dividends. That's something that, again, most channels don't even talk about. They don't tell you about the tax rates on some of these. Listen, BDCs are taxed differently than most other dividends that you're getting from other companies. So, listen, I want to give you all a full scope on this channel. That's why I talk about these things. All right. I don't want y'all to be sidewinded or side by any of this. So if a channel or someone is not giving you a full scope of things and they're just telling you, you're in the echo chamber of whatever it is that they're saying and not giving you the good, the bad, and the ugly, you probably should start watching somebody else. That's just my opinion. Lastly, lack of transparency. Some BDCs may lack transparency and investors may struggle to understand the costs associated with them. I find that to be the case for a lot of BDCs. A lot of BDCs will just give you basic information on what their earnings were. They'll give you a rundown on what they made, the cost of the business, how much they made, how much they lost. They'll give you a revenue breakdown. However, as far as their dealings, what's happening behind the scenes, a lot of these companies and BDCs are not transparent about. And again, if you don't have full transparency for some of this stuff, you won't know what's going on until it hits you and it's too late. And now you have to react based on the information that you have, but you're already behind the 8 ball at that point, right? Now, so all that being said, let's get into Fidus. Fidus Investment Corporation, got to pull it up right here. Overview. Now, let's go to the max chart. By the way, Fidus was created, this investment corporation was created back in 2011, okay? So we have, 13 years of data. We have 13 years of data to go off of. And in 13 years, this max chart is reporting a gain of 34%. That's not horrible. That's not horrible. However, in the grand scheme of things, you might consider it a pretty bad investment, considering all the other things that you could have invested in over the course of the last 13 years and made out like a bandit with. Yes, I know and I understand that hindsight is 20/20, right? However, I just believe that in 13 years, if all you could muster was 34%, this may not be a growth play. It may be a stability play like my last video that I did, right? Like the buy right strategy video. If you haven't seen it, go check it out. I recommend it. Some good valuable information in there. But I believe it's the same way with this one. Okay, except this chart looks a little bit more all over the place. You can see that dip back here in 2020, which is where the pandemic hit. Obviously, that affected businesses everywhere that had to close and shut down for a long extended period of time. So that was back in 2020, right? But what's happening? What's happening here? Look at all these other instances of where this stock has taken a dip, a rise. It's all over the place. And in terms of stability, it hasn't been that stable, guys, ladies and gentlemen. It hasn't been that stable. Now, it is green, right? You are in the green. Past 5 years, 35%. That's looking a little bit more stable. Again, you see the dip in 2020 there. We all know where that's from. On the past year, they're only up 2.1% over the past year. Green is still green, though. So gain is gain. Year to date, 0.23%. So it hasn't really moved year to date. Not on the 1 year, year to date. It hasn't really moved. I'm not really interested in the 1 month or 5 days because that's more recent and, of course, they have a little paragraph here about what FIDUS is. I'm going to read a little bit of it. FIDUS Investment Corporation is a business development company specializing in leverage buyouts, refinancings, change of ownership transactions, recapitalizations, strategic acquisitions, mezzanine, growth capital, business expansion, lower middle market investments, debt investments, subordinated and second lien loans, senior secured and unitranche debt, preferred equity, warrants, subordinated debt, senior subordinated notes, juniors. So listen, you get the idea, right? You get the idea. But what I do want to do, let's go over to the financials. You know where I'm going. I'm going straight to the cash flow. I want to know what kind of free cash flow they're working with. Hasn't been looking too good in the past 2 years. However, they have seen years of where they have been cash flow positive. You see their revenue growth, which their revenue growth has been positive. They've been growing every single year. It's all in green. Love to see that. Okay. That free cash flow is a thing of concern for me. Again, but it's only been for the past 2 years, okay? Only for the past 2 years. Now, I'm going to give you, now we're going to move on to the mother lode of this stock and why everybody's so interested in it, especially over other stocks like Maine, okay? It's the dividend. Because the dividend comes in at a whopping percent of 12.48%, y'all. FIDUS Investment has a dividend yield of 12.48%. That is pretty incredible. All right. This is a high yield dividend stock. All right. So that's $2.46 per share over the course of 1 year. If you drop down here, we can clearly see the dividend chart. Again, dips in 2019 or 2020. I don't know why there's a dip here in 2015. I don't know what happened back then. But you can see the dividend growth, which hasn't really grown. You saw a spike up in 2020, which I'm pretty sure that was after the dip, right? But you can see the chart there. And lastly, we're going to go over to the forecast and get out of here. One analyst, I think y'all couldn't get 6. Y'all couldn't get 3 more analysts. One analyst with a 12-month price forecast for FIDUS investment stock has a target of $22. Okay, a $22 prediction price point prediction for the future, which predicts an increase of 11.11% from the current stock price of $19.80. And they are saying that right now they believe this stock is a hold. Okay, a hold. So if you own it already, hold it. Just hold on to it. They don't think that it's a buy. They don't think that it's a strong buy. They think that if you have this stock and you own it already, that you should just hold it. Okay, hold it. Now, you have to decide what's best for you. I could say that if you want some stability, this stock hasn't been too bad over the course of it's not in the negative, which is a positive for me, which means if you want something with a little bit of a higher dividend yield and some stability, then go ahead and check out Fidus Corporation. Okay, right now, again, they're saying on average that you should maybe not buy. They're saying that you should hold this if you already have it. Now, I might amend that myself and choose to buy and hold this at a price point of $19.80. This may be, I might go and buy a couple of shares of this. Might spend $100, get a little bit more than 5 shares. But you all tell me what you think in the comments. If you own Fidus investment, you let me know how it's been for you. And hopefully this hasn't been too long or too boring. And I'll see you all in the next one. Later.